Has this ever happened to you that you invested in a mutual fund scheme and the day you invested, its performance started going down? Or maybe after a few weeks and few months, the performance started going down and it never recovered. And after a few years of investment also, you had to exit finally in loss. And while you invested, you checked all the parameters, you saw the past performance, you saw everything you need to see, and still you made loss. If this is something you have faced, and you want to avoid this in future, this video is for you. Hi investors, and welcome to another interesting video on investment strategies for mutual funds. I'll start with step-by-step process and all the parameters you need to look at while you are choosing an equity mutual fund scheme. So let's start with the first parameter. So the number one thing you can look at is portfolio turnover ratio. Now in simple word, what it means. Let's take an example. Let's say in a mutual fund scheme, in the last 1 year, the fund manager, who is a fund manager? The topmost guy of the fund who is responsible for taking all the decisions. So in the last 1 year, the fund manager sold 30% of the stocks in that mutual fund scheme and bought something else. Now, why he did that? Because he was doing his research, and research said, take out these 30% stocks, these particular stocks, and buy the new ones, right? So this 30% is called portfolio turnover ratio, or in simple terms, turnover ratio. So this is basically telling you how much churning is happening in the mutual fund scheme by the fund manager. For example, another example, let's say the turnover ratio is 80%. It means in last 1 year, the fund manager has sold 80% of the stocks and bought something else in place of those stocks, right? So that's what the turnover ratio is telling you. Now, as an investor, I want the turnover ratio of the scheme to be as low as possible, because I want the manager to be confident enough to have that conviction in his research that he is choosing the right stocks by doing as much research and as good research as possible, so that he does not have to sell and buy every now and then, right? So it's important that the turnover ratio should be as low as possible. Now it does not mean this is the only parameter to look at. This is one of the parameters. We'll look at approximately 6 parameters today, and we'll look at it in a balanced way, that how can you look at all the parameters in a balanced way and then choose the final scheme, right? So this is one parameter, not the only one, right? But this is clear that we prefer the fund manager to have that conviction and confidence, and thereby the turnover ratio of the scheme should be as low as possible. Number 2. Next thing I want to point out, and the most important point when it comes to mutual fund investing in my view, is the size of the fund. Now this is where most of the investors they ignore it, or they just don't care about the size of the fund, and that's where one of the biggest reasons why you invest in a good scheme today and then it starts falling, the performance starts going down. The problem here is, if the fund size increases too much, it goes below above a certain level, it becomes tough for the fund manager to perform in that scheme. Why? Because at any given point, the number of quality stocks is always limited. Now, this is like a catch-22 situation for the fund manager. If the fund manager is performing good, the scheme returns are good, the existing investors will put in more money in the scheme, and even other investors will see the performance and they also want to grow their money, so they will also start putting money in the scheme. And that's what any fund manager, any mutual fund scheme wants, that they want more and more people to come to them, right? But as that fund size keeps on growing, it becomes a problem for the scheme at a certain level, that beyond that, now giving that performance in the scheme becomes very difficult, because you cannot have like hundreds of stocks to choose to perform in a scheme, because as I said, at any given point, the number of schemes or the number of stocks which are like good quality stocks is always limited, right? So always look at the fund size. How much is the size compared to maybe the peers, and that will give you an idea whether the size is going beyond a certain level. And look at the journey of the scheme. You'll get to know what kind of the size it has been and what kind of size it has. Something which is not there in mutual fund schemes typically, apart from focused category fund. You will have 40-50 stocks typically in any mutual fund scheme, but I don't want it to be like 100, 120, 130, because again there you will see this problem of size. scheme having more stocks is the one which has got a huge fund size already. And that as I just said a few seconds back, that at any given point the number of good quality stocks is limited. Now there is one fund which has got 50 stocks, another fund which has got 100 stocks. Now the scheme with 50 stocks still has got some buffer to add on more quality stocks. But the scheme which already has got 80, 90, 100, 120 stocks, what buffer do they have? What more options do they have to add more quality stocks? It will be very, very few, right? So number of stocks, lower the better. Size of the scheme, I believe lower the better. But one point I missed on. In size of the scheme, I want it to be more than 1,000 crores. I don't want it to be very small also, because that also leads to more charges and other issues, right? The fund manager can get aggressive in terms of increasing the size, and all those issues are there. So I want it to be more than 1,000 crore fund size, but it should not be too high as well. You just compare the other peers in the group and you will get that. Fourth point I want to point out in this fourth parameter is expense ratio. Now expense ratio is nothing but annualized charges which mutual fund company deducts from your investment so that they can run their business, right? So if you notice, no mutual fund scheme asks you to cut a check for them that, I am managing your fund, so give me this fees, and then that's how I will run my business. They have this authority from the regulatory authority that they can deduct the amount from your investment and the remaining amount gets invested in the scheme, right? So that's called expense ratio. Now, naturally, I want expense ratio to be as low as possible, right? But as I said in the beginning, there is no parameter which has to be looked in isolation. It has to be looked in wholesome. So I will not say this scheme has got high expense ratio and this has got low expense ratio, so this scheme has to be good. No, not necessary. Yeah, but yeah, if I look at one particular parameter, that is expense ratio, I want it to be as low as possible. Yeah, so expense ratio as low as possible. Number 5, performance. Now within performance, there are two things to look at. One is trailing return, the second is rolling return. Trailing return is nothing but compounded annual returns of last, let's say, 5 years. Now I recommend that you look at 5-year return, not 1, 2 or 3, because in last 1 year or maybe 2 years, maybe up to 3 years, the fund manager might get lucky, right? There can be some exceptions that they played on some very aggressive stocks and they made some money. But I don't want to invest my money on exceptions and luck. I want to invest my money on research and skills, right? Now, no fund manager, I believe, can be lucky for 5 years in continuation. So if they've performed for 5 years in terms of, again, comparing to the peers, then I believe that they really have the skill and knowledge, and based on that, they have shown the performance, right? So 5 years is like a sweet spot. It's not too long a period. It's not too short a period, right? So look at last 5-year trailing returns and compare with the peers. What is the kind of returns the scheme you are investing in or you are planning to invest in has given, right? Second part in performance is rolling return. Simply go to advisorcoach.com. There is no paid tool required. Go to advisorcoach.com. You will get the answer to how to, and you can find on Google, you'll get the answer how to find the rolling return using advisorcoach.com website. Go there. I typically look at 1 year rolling return of last 5 years. Yeah, just check that, because that shows you the consistency of the performance of the scheme, right? Again, a 5-year also, there can be a chance that the scheme was not performing 5 years back and the base was very low, and that also helped it give some kind of returns in last 5 years. So to nullify that, I would look at rolling returns, because that will show me the consistency with which the mutual fund scheme has really performed, right? And the next one, and the most important one, is the fund manager. Now within fund manager, there are two things. Number 1, how much is the fund manager investing his own from his own pocket into that scheme? Yes, that's allowed. First of all, it's allowed by law, and I have made a detailed video a couple of months back on how much the fund manager is investing and how to check that. I'm sharing the link in the description. After this video, please go and watch that. There is something called scheme information document, in which you can get all the details of what is the investment done by the fund manager of that scheme, so that you have that confidence that there is some skin in the game, there is some stake in the game by the person who is managing your money, right? Because that it will pinch him also when the portfolio goes down, because he is also investing his money, right? So it's very important to check that. And the second part in fund manager is the retention. Since when is the fund manager managing that scheme? Now you will not want your manager to change every now and then. You want some stability, so that they can really plan, really invest in research as per the long-term planning. Yeah. So the longer the fund manager is staying with the scheme, the better it is for me as an investor. That's what I would prefer, right? So broadly, we have looked at 6 parameters. Number 1, portfolio turnover ratio, lower the better. Number 2, size of the fund, more than 1000 crores and as low as possible after that. Number of stocks, lower the better. Expense ratio, lower the better. Performance, of course, higher the better in trading returns, and also look at the rolling returns. And fund manager, look at how much they are investing, again higher the better, and the retention, the longer the period, the better it is, right? So I believe this quick summary of what parameters you should look at will at least help you judge the existing schemes in your portfolio and also the ones which are there in your watch list and you're planning to invest in them. So make sure you drill the schemes using these parameters and then take your call whether you want to go ahead with this investment or not, right? Now, as I said in the initial part of the video, there are cases when you invest in a scheme thinking that this is a good scheme, looking at the past performance, and mostly people look at past performance, and then you end up losing money in that scheme in the future. The chances of that reduces when you look at holistically all the parameters. Don't just look at the past performance, that's not enough, right? And as I said, the most important one in my view is the size of the fund. Because the fund starts performing well, the size increases, and it increases to a level that now the scheme performance starts going down. And unfortunately, you entered at that level when the scheme size had already become too large, right? So please pay very close attention to the size of the fund so that you don't face that kind of a situation in future, that you start investing in something and then it starts going down. Yep. I hope this made sense. If you like this video, please like, share and subscribe as well to the channel so that I can share more such videos with you in future as well. All the best with your mutual fund investing journey. Thank you.